The downside being that tune over the last few years hasn't been a very great tune. In fact, they haven't performed very well. Chinese shares have really been the dogs of the global share market, where even the US has done fantastically well, and other emerging markets like India have done very well. Chinese shares have been in the doldrums. Hi, this is Chris from Stockspot, Australia's largest online investment advisor. And in this video, I'm going to be talking about emerging market shares and particularly Chinese shares. Very unloved at the moment because they haven't performed very well. And we're getting a lot of questions from clients. Should I and can I remove them from my portfolio? So to take you a step back, I would say that the Stockspot portfolios are built in a way that aims to give you the best risk versus reward in your portfolio over the long run. And we do this by combining different asset classes to help to smooth the volatility or the risk in your portfolio while still giving you a good return. So in order to determine how much of a particular investment or asset should go in the portfolios, including emerging markets, and within that Chinese shares, we've really tried to balance out risk and return and also understand how different assets interact with each other, which is known as correlations. Ideally, in a portfolio, you want some assets that are doing well at the same time that others aren't doing as well, because it helps to smooth your overall portfolio returns. And emerging markets actually play quite an important role in a portfolio because they have a lower correlation, a lower relationship to Australian shares than, for instance, global shares. So they dance to their own tune, and that actually is really valuable from a diversification perspective. The downside being that tune over the last few years hasn't been a very great tune. In fact, they haven't performed very well. Chinese shares have really been the dogs of the global share market, where even the US has done fantastically well, and other emerging markets like India have done very well. Chinese shares have been in the doldrums, and I think a lot of people understandably are wondering, do I really want to keep them in my portfolio? Our view at Stockspot would be absolutely yes. At any point in the cycle, there's always going to be some assets doing well and poorly, some countries doing well or poorly. That is the nature of diversification. That actually means your portfolio is doing exactly as it should be doing. You need to have allocations to different countries because they're going to perform differently at different points in time. And the Chinese economy is obviously a big part of the global economy, and it's one that you will want long-term access to in your portfolio, even though there's going to be periods of strong performance and relatively weak performance as we've been seeing recently. The great thing about the Stockspot portfolios is that it's not the only asset in there, and there's others in there like global shares and Australian shares and gold, which have done very well over the last few years and actually helped to give a great overall performance. And so what you'll expect to see across the cycle is other periods of time where emerging markets and Chinese shares might be taking the lead when other parts of the world, let's say US shares, aren't doing as well. So my tip would be stick with it, continue to invest in a diversified way and include a broad spectrum of assets, including emerging markets and Chinese shares. However, if you absolutely don't want Chinese or emerging market shares in your portfolio, we do have an option for that as well, which is the Stockspot sustainable portfolios. Because we don't have an emerging markets allocation in those portfolios, the Chinese exposure within the equities part or the share market part of those portfolios is less than 1%. And so it does allow you to remove all exposure to that part. However, you need to recognize that if there is a period where Chinese shares do well, you won't have access to that, and you may underperform the core portfolios at that point in time. If you like this video or have other questions, please post them below in the comments section or subscribe to my channel.